Okay, Phil, let's talk about the last surprise that we don't want people to get. And this is often one that probably isn't talked about enough, but one that is significant, usually because of the dollar amounts and the amount they could owe when they receive it. What is that?
It's the cancellation of debt income.
Okay, so that could result in any time a bank or financial institution or anybody you owe money to writes off a debt, gives you a break. You think you're walking away scot-free? Not really. Here's what happens.
And oftentimes we see this when your house gets foreclosed on and the bank later sells it. They've forgiven your mortgage. But did you know you have to pay income tax on the debt forgiven?
It's treated like income. So oftentimes it should be like Phil mentioned, a foreclosure, or think about credit card if you're written off a debt there. So Phil, what about medical debt? Does that qualify?
Even medical debt. In fact, anytime a creditor forgives their debtor any amount of money owed to them, they'll issue a 1099-C to the IRS to let the IRS know that they've written off this debt and now it's imputed income to the taxpayer.
Wow, you can see how this can become so significant. Those are large dollar amounts. Foreclosure, medical, credit cards, significant impact. Maybe not as prevalent as the CP2000, but way more damaging. Agreed?
And often where you see a 1099-C, it'll also show up on your CP2000.
There you go. It all comes full circle.
Optima tax relief.